Hi Naveen.
Hi Uttam, how are you?
I'm good Naveen.
Yes.
So I have a few doubts on loans, regarding the expertise on loans. I'll ask you a few questions. Please kindly answer to my
Sure,
questions.
sure, Uttam. Please tell me.
What is the biggest mistake people make while taking a loan?
What they wanted to pay in their brackets, but they majorly do a mistake is they don't look at what exactly they would pay in the end of the tenure. That is the major mistake. People don't look at the interest part is there because, and in this what happens is any person or any company or whoever who wants to borrow the loan, they need to look into certain points. Majorly, I would say look at the interest, whether it's a floating or fixed one. Major point that would be. Next, see how much interest amount that you're going to pay by end of your tenure. And the third, I would say, look into the other aspects like in what would be the prepayment charges, what would be the foreclosure charges, and what is the PF processing fees that is involved. These are the major hidden charges this would be. So ask these kind of things to any of the lender that you are trying to borrow. Don't choose a loan because it feels easy today. Choose something which you don't feel burdened tomorrow.
Amazing. Who should actually consider taking a loan right now, Mr. Naveen?
So, someone who is wanting to consolidate the multiple loans that they have, or someone who is wanting to upgrade their assets or build assets, or someone in the business who wants to expand their business, are major things a person should look into when they wanted to actually borrow. So finally here what I would say is take a loan when it builds your future and not to satisfy your present.
Great. How can the wrong loan impact someone financially?
Wrong loan can silently damage your financial stability. Higher EMI, wherein it downsides it spoils your cash flow and it gives you stress on it. Longer tenure generally what happens, it majorly makes more interest burden on you, and the wrong structure when there is no flexibility. For example, don't have any foreclosure option, then it becomes an issue in the wrong structuring of the loan. Poor planning basically, which damages the credit score as well. So in the worst case, what happens, it leads to debt traps, asset loss, majorly in the secured loans, and it leads to mental stress. These would be the major points in choosing the wrong loan. And finally, what I would say is a wrong loan does not just cost money, it costs peace of mind.
What someone should check before applying for any loan? Okay.
Rightly asked. So here anyone should look at the 5 major points. What I would say, the first major part, the purpose for what you are taking this loan. Next, how comfortable you are in paying the EMI that comes up. The next, look at the interest, that is whether it's a floating or fixed part, and look at the interest component that you're going to pay till end of the tenure, and look into the part, the hidden charges, prepayment charges, it would be processing fees, it would be any foreclosure charges it can be. So these are the major points that someone should look into before taking any loan. So finally I would say right loan is not the fastest one, it is the smartest one.